Alright, just one final update on the VIX trade today. If you recall from the past video, we were calling for the target of around 2076 as a potential gap fill play, and surely enough, that's exactly where it closed near the end of the session. So if we take a look here, if we review our trade from earlier in the day, there's the opportunity here to capture between 4 and 5R. I of course got out at the 4R mark. I got stopped out here. I trailed my stop and got stopped out in this area here. And then if you did not trail your stop, then the next logical, if you did not take quick profits, then you could have easily gotten a 5R and then trailed your stop to this area here where you would have gotten stopped out. So I was looking for areas to buy pullbacks, but did not find anything very compelling, so I gave up watching the VIX. But surely enough, the VIX, and if you recall from the previous video, we mentioned that the key thing for the VIX in terms of it remaining strong was that it had to hold above the opening range. And so sure enough, it held above the entire day's opening range, right? So it did do a pretty steep retracement. As you can see there, let's zoom out a bit. It did retrace quite steeply, but it remained above this opening range high, which is the key support level. And then it started to make its way back from 2 o'clock, but it really took off starting right here at 3:55. So had you waited patiently all day and kept your eyes on the VIX, then at 3:55, then it made its move. So it's one of those things where oftentimes you can have a great feeling for where price action is going to go, but unfortunately you can't capitalize on it. And this is one of those days where we had a really good feeling that gap fill was a good possibility, right? And unfortunately, just did not play out intraday. You had to be you had to stay glued to your screens and up to the final minutes of the day to try to capture that particular trade. But some interesting patterns here as we reflect on this trade. So for instance here, we'll just draw it in as I see it now. We have this type of pattern here, which we've highlighted in the past. This is a simple megaphone pattern, and you'd play this megaphone pattern traditionally by buying the break above this megaphone pattern. So this line here, I'll just draw it in another way. From the top of this bar, a break above this top of this megaphone. So a megaphone is drawn by taking a high, then the higher high, then we take the low and the lower low. And so we draw a line across the top of the lower high, and a break above that is an indication it's going to go to the upside. And sure enough, this bar here in fact broke above that. And the good thing to see here is that it actually broke on very high volume as well. As you can see from this marker here, it broke on exceptionally high volume on this bar right there. So that was your chance to get long. Another pattern here, if you actually look carefully, we actually have a tight triangle also that appeared right there. And so that's another, a megaphone turning into a symmetrical triangle. That's another very conducive pattern, because this basically tells us that we had some broadening and then some consolidation. So some divergence followed by some convergence. If you take it back even further, just to give you a little more context, if you draw it back here, if you notice, this is in fact here we see a ascending triangle, right? So what do we see here? And I'll actually just show you. I'll draw this bar a little even further out. We'll take this line here and we'll extend it all the way to the right here. So this ascending triangle broke to the upside. It had a break on fairly low volume, so it broke up, right? So the longs who went long here, they thought they had caught the move, so they had been patient all morning, all afternoon, and thought that that they had a chance now to get to this perhaps target at 2076, somewhere up there. And unfortunately, it came back in. So these early longs probably got scared out, and if they didn't get scared out here, then they may have, because for instance, if they had bought the breakout here and had layered their stops below this message bar, they would have been up 2R. So had they been up 2R, they probably would have trailed for par, and they probably would have got stopped out in this action here. But as we know, the second mouse often gets the cheese, right? So this price action comes in, does a breakout, retraces right to the previous level of resistance, which became support. You can see the buyers stepping in here. These are that's the smart money stepping in, and then taking it up to the upside there, right? And notice the length of this is nearly the same length as that. So this run here, and this is an important thing to point out, this run is nearly the same length as that run. Alright, so if you've just been playing this small pattern and you got late to the game, you didn't see the bigger context of things, then this is enough to give you a pretty good indication of of a high probability play. Now, seeing this also playing out gives you a number of confluences, right? Some positive confluences, which gives you even more conviction in this play. That means you really want to be again holding this guy and trying to squeeze the profits here. So if we measure this potential profit target, this is a breakout of this here. Let's say we take that, and that would easily be in a close to 4R trade, right? So good trade to end the day. Unfortunately, for most people, unless you were glued to the markets, you probably did not capture that trade unless you took that like right to the end of the day. Again, here's another place to get long. So if you didn't take this first bar, you could have taken this second bar here. That probably worked out for you in about, I think it's probably about 2R. Would have been a 2R trade, yeah. Would have been a 2R trade right there. Hits the gap fill right at 2076, right on the dot. People took profits, and that was a good place to take profits and close out the day. So some important lessons there in terms of the VIX and the overall market. Again, I think to summarize, when you have a high conviction or some gaps, or you have some multiple confluences, you want to be looking for opportunities to get back into that trade, especially if it doesn't break down. So we mentioned earlier that so long as an opening range high doesn't get violated, we're still interested in this trade. And now if you have the patience to sit around all day sometimes, and sometimes you need that patience, sometimes you need to have that patience for these things to play out. Alright, hope that helps. Happy trading.